Most people think they're investing when they're actually gambling. Meaning, if you're trading stocks for quick profits, you're not investing, you're speculating. And history shows that speculators almost always lose. Let's discuss. You see, trading means you're trying to time the market. That is, you're trying to buy low and sell high. Sounds smart, right? But the fact is that market timing is a trap. This is because it's based on emotions and not logic. Investing, on the other hand, is different. Because when you invest, you're actually buying a part of a business and not just a ticker symbol. And you hold it for years and not just a few minutes or even a few days. And interestingly, Ben Graham, the father of value investing and Warren Buffett's mentor, warned us decades ago. He said that in his 50 years of stock market experience, he had not come across a single day trader who had consistently made money by trying to time the market. Please understand, this is not a random opinion. It's 50 years of watching speculators crash and burn. Now, if you still think that day trading is the way to get rich, then ask yourself this. If day trading works, then why do the vast majority of traders lose money? So what's the better strategy, you ask? Here's what I'd suggest. Study businesses, buy great companies at reasonable prices, and finally hold them long enough so that compounding can do the heavy lifting for you. Because that's how real wealth is built, and not by you reacting to every blip on a chart. And so the best trading strategy is no trading at all. Invest instead. Because remember that real winners aren't jumping in and out of the market. They're staying in and thinking long term. And finally, if you want to stop speculating and start building real wealth, then hit follow and subscribe. And let's break down real investing step by step.